Hey, what's up, Chicago? Jason Wagner with Greystone Realty here. I'm gonna go through the latest numbers for the Chicago real estate market and give you my forecast on how I think the market is going to be impacted by inflation and rising interest rates. But before I do that, please hit the like and subscribe button. All right, let's check in and see how the real estate market did as of February 2022. So there are 5 big trends we are seeing right now. The first one is overall median sale prices continue to rise at a strong pace. February was up 6.9% for all of Chicago from prior year. 2, we are in a seller's market for single family homes, 2 to 4 units, and low-rise condos. Inventory levels remain extremely tight in these property types, and we are seeing strong demand that is causing bidding wars, higher sales prices, and lower days on market. 3, demand for high-rise condos is coming back, but still not enough to convince me that we are out of the buyer's market territory. The downtown loop and near north side still have 7 months of inventory, but this is a major improvement from last year when we had between 11 and 13 months of stagnant inventory. 4, interest rates are on the rise and they are moving fast. The ultra low rates were in the 2 to 3 range are gone, with the average 30-year fixed conforming loan now at 4.5% according to the Mortgage Bankers Association. You may have heard that the Federal Reserve intends to continue to raise interest rates 6 more times in 2022 to help curb inflation. This will have a direct impact on your new monthly payment, making the cost of housing even more expensive as we move further through the year. It's becoming more likely that the sky-high sales prices that we have been seeing will start to slow down as interest rates rise. And the 5th trend we're seeing is the rental market is experiencing some of the strongest gains we have ever seen in Chicago, up 8% from prior year, with vacancy rates at the lowest levels in the past decade. It is a great time to be a landlord, but a tough time to be a tenant. So one thing that is extremely important for you to understand is that inflation is all around us, and everything we are buying is more expensive than it was a year ago or even just a few months ago. We see it in our fuel prices, grocery costs, insurance rates, labor costs, utility bills, and practically everything else we consume. But you know what is the best way to defend against inflation when it comes to housing? Locking in a 30-year fixed mortgage rate. It's that simple. Your principal and interest monthly payments stay the same for 30 years when you go and buy a house. So let me say that again. Once you lock it in, it will not change for 30 years. It doesn't matter where rates or inflation goes after you lock it in. This is the best way to protect your highest monthly expense against inflation. Let's dive into the numbers of this month's Wagner Report. Overall, Chicago real estate continued higher in February, with median sale prices up 6.9% from prior year at $342,000. Properties are selling about 8 days faster than last year, now averaging 75 days on market. Months of supply of inventory continues to shrink, now at 3.6 months. This is down from 5.1 months from prior year. Under contract activity is up 20.8% from prior year, and new listings is up 6.9% from prior year. Now let's look at the performance of single-family homes, condos, and 2 to 4 units from prior year. Single-family homes are up 12.5% at $315,000. Condos are up 0.7% at $338,000. 2 to 4 units are up 17.7% at $385,000. Now I really want to emphasize what these huge percent increases really mean for property owners. Let's put it this way. If you bought a 2 to 4 unit in Chicago last year, you would have maybe purchased it for $327,000. Now fast forward 1 year later, and that same property is worth $385,000. That's a $58,000 increase in 1 year. That's larger than many annual salaries that we're seeing. Now, property owners of 2 to 4 units and single family homes have been benefiting big time. So where do I see this market going? I anticipate that we are going to see a strong spring market again this year as buyers try to lock in lower interest rates before they go too much higher. As inflation continues to rip through the economy, I do expect the Federal Reserve to take serious action and raise interest rates aggressively. This could likely lead to a slowdown in home prices, but not a decrease in price. We are in a long-term, low inventory environment, and that will continue to put upward pressure on prices even with higher interest rates. I still think now is a great time to buy and also a great time to sell. Interested in seeing which Chicago neighborhoods are the top movers in February? Sign up and receive this month's Wagner Report. And if you like this video, please give me a like and subscribe.